Welcome to another episode of RegTalks. In this edition, we review 9 recent tax and trade developments reported by RegFollower, Australia's updated company tax guidance reflecting the global minimum tax framework, the EU's new regulation reducing tariffs on selected US imports, Italy's latest Pillar Two guidance on GIR filing, Romania's revised transfer pricing rules, South Africa's 2026 tax filing season updates, Turkey's extension of the global minimum supplementary corporate tax return deadline, the UK's transitional approach to Pillar Two late filing penalties, the IRS update on country-by-country reporting exchange arrangements, and Vietnam's extension of VAT, CIT, PIT, and land rent payment deadlines. Let's get started. Australia. A TO aligns 2025-26 company tax guidance with global minimum tax framework. The Australian Taxation Office, ATO, has updated its 2025-26 company tax rates guidance to include the global minimum tax, GMT, introducing a top-up tax of 0%, 15% for in-scope multinational enterprise groups whose effective tax rate falls below 15% in a jurisdiction. The regime, based on the OECD's Globe Model Rules, applies to groups with annual consolidated revenue of at least €750 million and is implemented through Australia's minimum tax law with the Income Inclusion Rule, Domestic Minimum Tax and Undertaxed Profits Rule now in effect. EU adopts regulation reducing tariffs on selected US imports. The EU has adopted Regulation E 2026/1455, reducing customs duties on a wide range of US origin goods from 1st July 2026 to strengthen bilateral trade relations. The measure cuts tariffs to 0% on many industrial and selected agricultural products, introduces preferential 0% tariff quotas for specified goods, and suspends the ad valorem component of duties on certain products. The European Commission may suspend preferences if US commitments are unmet and will monitor trade impacts through regular reports until the regulation expires on 31st December 2029. Italy updates Pillar Two guidance with GIR filing rules, FAQs. Italy's Ministry of Economy and Finance and Revenue Agency have issued coordinated Pillar Two guidance introducing centralised filing for the Globe Information Return, GIR, allowing qualifying multinational groups to submit a single return through participating jurisdictions under the OECD's Common Understanding. Italian entities are temporarily exempt from local filing unless exchange data is not received by 31st December 2026, after which local filing may be required. Updated FAQs also clarify reporting requirements for ownership changes and liquidated investment funds under global minimum tax rules. Romania. ANAF approves updated transfer pricing rules to prevent tax disputes, aligned with OECD standards. Romania's Ministry of Finance and the National Agency for Fiscal Administration, ANAF, have introduced revised transfer pricing regulations, modernising rules unchanged since 2016 and aligning them with OECD standards. The reforms raise documentation thresholds, require electronic filing for large taxpayers, standardise comparability analyses, and expand documentation requirements. They also strengthen advance pricing agreements by clarifying rollback conditions and cross-border procedures. The updated framework aims to improve consistency, reduce compliance burdens and disputes, and provide greater certainty for multinational enterprises undertaking intra-group transactions. South Africa. SARS launches 2026 tax filing season with expanded auto assessments, digital upgrades. The South African Revenue Service, SARS, has launched the 2026 tax filing season, expanding its auto assessment program to include certain provisional taxpayers while introducing digital enhancements such as improved e-filing, expanded pre-populated data, WhatsApp services, and streamlined guidance. Key deadlines are July 12, 2026 for auto-assessment responses, October 23, 2026 for non-provisional individual taxpayers, and January 22, 2027 for provisional taxpayers, trusts, and amended auto-assessment returns. SARS has also introduced updated reporting requirements and legislative changes, including revised loss ring-fencing thresholds. Turkey extends 2024 global minimum supplementary corporate tax returns deadline. The Turkish Revenue Administration has issued Tax Procedure Law Circular number 203, extending the filing and payment deadline for 2024 global minimum supplementary corporate tax returns from 30 June 2026 to 31st July 2026. The circular applies to returns required under the OECD's Pillar Two Global Minimum Tax Framework and covers businesses calculating top-up tax using either the Income Inclusion Rule, IIR, or Undertaxed Profits Rule, UTPR. The extension gives affected taxpayers an additional month to file returns and pay any tax due. UK confirms no Pillar 2 late filing penalties for returns filed before August 2026. HMRC has updated its Pillar 2 guidance, confirming that under its transitional approach, it will impose no late filing penalties until August 1st, 2026 for UK tax returns, overseas return notifications, and global information returns, GIRs, submitted after the statutory deadline. It also introduced transitional rules allowing eligible multinational groups to avoid dual GIR filings by using central filing in participating jurisdictions, provided an overseas return notification is submitted on time and the GIR is shared with the UK within 6 months of the filing deadline. US IRS reviews CbC report exchange status makes no changes. The US Internal Revenue Service, IRS, published a revised version of its country-by-country CbC reporting jurisdiction status table on July 1st, 2026, with no changes from the previous update issued in July 2025. The table continues to list 53 jurisdictions with operative competent authority arrangements, CAAs, 1 agreement pending, Jamaica, and 2 jurisdictions, Cyprus and France, still under negotiation. The CAAs facilitate the automatic exchange of CbC reports under applicable tax treaties, information exchange agreements, and multilateral conventions. Vietnam extends 2026 VAT, CAT, PAT, land rent payment deadlines. Vietnam has issued Decree number 245/2026/ND-CP extending 2026 payment deadlines for eligible taxpayers' VAT, CIT, PIT and land rent while leaving filing obligations unchanged. Provisional CIT payment deadlines are extended to November 2nd, 2026 for Q2 and December 30th, 2026 for Q3. VAT payments are deferred to November 20th, 2026 for May, 21st December 2026 for June, September, 2nd November 2026 for Q2 and 30th December 2026 for Q3. PIT and first land rent instalment payments receive up to 5-month extensions with no late payment interest during the extension period. That wraps up our roundup. This week's developments show a clear shift from high-level policy design to implementation and compliance. Pillar 2 continues to move into operational detail, with Australia updating its company tax guidance, Italy clarifying GIR filing mechanics, Turkey extending the deadline for global minimum supplementary corporate tax returns, and the UK offering transitional relief from late filing penalties. Transfer pricing and transparency also remain firmly on the agenda, with Romania modernising its transfer pricing rules and the US confirming the current status of its country-by-country reporting exchange arrangements. At the same time, governments are using tax and trade measures to manage economic pressures, from the EU's tariff reductions on selected US goods to South Africa's expanded digital filing season and Vietnam's extensions for VAT, CIT, PIT, and land rent payments. The overall message is clear. Tax compliance is becoming more digital, more coordinated, and more closely linked to cross-border developments. Thanks for watching RegTalks. See you next time.